Say guys, I'm only talking to myself. This is for this is paper trading, and this is for myself only. Um, but before I get into my trade today, which is this right here, I want to go over all the stocks that I was watching. Um, SIG was on my watch list, but that's not going nowhere, so I'm not even going to talk about that one. Um, CR SR was one that I traded. I forgot how I performed on that one. Let me look at my list, but I did pretty well. Second trade was pretty bad, but um, just watching it to see how it's gonna perform. And after trading it yesterday, it just faded some more. So that would have been a good short. Probably a long, slow short, but there's continual opportunity. ALF, um, Tim Bowen was talking about this in his his thing today. His video, his morning prep. It was red on the day at first, so I didn't watch it. Didn't know that it did this big spike and fade, but almost every stock that I was watching today did this exact spike and then drop, and it was red on the day. So whoever got in on it, um, as you see the close compared to the open, it was red. So whoever thought it was gonna be the first red day got squeezed. Um, but KIN, I spoke about that. Didn't go nowhere. Went up a little bit, a couple cents, but not worth it. Um, I don't know why it's still on my. I don't know why this is still on my watch list. Um, APRE was what I was trading before. I was down um, almost $600 on it earlier today. Then I reshorted it here. I got squeezed here. I shorted it here. Tried to cover before it started spiking. Got squeezed. Covered at high day. Tried again. Shorted and only made $25 off of it. I made back my almost $600 loss on my $25 and another 25. But it ended up fading way more um, than what I expected. But I got out like right here because right here really because of the bounce, which it did bounce a little bit, then faded again, and then ripped up a little bit and crashed. So I'm glad I still got out in that area, but looking back now, it would have been smarter for me to keep watching it. Um, but I left the house. I went on to do shit. Um, but just know this was a great opportunity. Um, Great fade. I didn't see as much manipulation on the SEC filings, but there was on the chart. Um, AVXL. I put that on my watch list now, just now before I started this video. I'm going to be watching it tomorrow, and I got to look at the SEC filings, but I'm not liking this chart. It did a cup and handle. Don't really like it. Don't know what this shit's going to do, but I'm just going to watch it tomorrow to see what happens. It's a possibility I might trade it, but most likely not. So this is the stock I traded. Like I said, almost every stock that I was watching was doing this. Um, After I came back from trading APRE, I left to go do an errand. Came back. As I am coming back, the stock is already hit the highest point for the day. and and it pulled back, and I had to evaluate this. So I'm gonna explain it and then evaluate the whole situation. So it went up to 1946 higher day, pulled back. I got in on a bounce. Um, I got in on a bounce right here. Let me show you on the screen. I got in on a bounce right here, and I got in at 1857. I got in at 1857, and I got in, and I was scaling in, I guess. Uh, what the chart is telling me. Excuse me. Yes, I remember. Um, so I was entering my order. Excuse me. And I meant to put 500 shares, and I was risking off of, I think, the 1865. So I was risking about 6 cents per share, which was about, you know, $30, I believe. Yeah, $30. Um, and then I pushed it up to like 70, or I had my stop limit order at the range from 65 to 70, but my entry was 1857. So then none of it got, only half of it got filled, and I accidentally hit the cancel button. So I just doubled down since that was like what I was already in, um, to get close to 500, a little bit above, and then I just added the rest to make it $1,000. I mean, 1,000 shares. Short, and my risk was still the 70 cent range from 1865 to 70. Um, and like I said in my last video, I was going through that emotional roller coaster, and I had to. The main thing in this trade was self evaluation in the moment, and being able to make a decision when it's time to make a decision. And um, no, I got in. I'm sorry, I got in here. I got in here, faded, and then right here is where I had to go through that self evaluation. And my emotions were really high because I didn't know whether it was gonna continue to going up or not. But I was so like careful because I had to remind myself, Sonny, you're in already $1 off its highs, $1.50 off its highs. Well, it's already down $1.50 off its highs, and you don't know if this can just pull back hard, trap shorts, which this looked like a short trap to me. A short trap, consolidation, push up, and it pushed up here, and then it pushed up past this candlestick, and I was like, okay, this was a short trap. It's gonna start squeezing again, and I was under massive emotions, and I had to look at it. The previous day, as you can see here, was $14. High next day high was 1950 roughly. So that's a a $5.50 difference, and it pulled back $1.50. So that's about um over a 25 cent, only over a 25% move, probably 30% pullback. And remember what Duck said in his DVD. These stocks will do a 30% pullback, consolidate, and push back up. So that hit my mind too. I'm like, okay, we're already at the 30% range, and I got in just above the 30% range. So And I know, probably looking back at this video, I'm not gonna really understand it, but I understand it now. But it pulled back roughly 30%, and that means it has like a high chance of still pushing up. And it started doing that because I'm shorting a first green day, parabolic, whatever you want to call it. Um, but what was on my side and what made me trade it was the fact that it was gearing towards midday. It was midday, one of those midday faders, and I was in for an opportunity. So the size was bothering me because, and it wasn't really bothering me. I just didn't want to lose, and that was the wrong mindset. I did not want to lose because um, I just I lost on two trades. I lost big on one, or roughly big on one, or kind not really too big on one compared to my gains. But it was more than what I wanted because I had changed my mind. I was like okay with 500, and I'm like, nah, I'm not okay with 500. And I already lost on two trades, and I lost the day before, and I'm like, okay, I don't want to lose on this one. So that mindset is negative, or not the proper mindset, because you can't control whether you lose or win. You can only control how much you give up. Um, and uh, I had the wrong mindset in this trade because I didn't want to take the loss. And you know what happens after you decide you don't want to take the loss? The loss becomes bigger. So I had to really be like I put myself in an emotional state, and I had to really like watch this stock like a hawk. And I didn't even enter my stop limit order because I was in so much fear. And um, I was in so much fear, and it kept consolidating. It pushed up right here. I'm like, oh shit! It pushed up past this previous candlestick. It might just do that rip to the upside, and I'm just like, fuck. And this is literally what's going through my mind, and more. There was so much more going through my mind at the moment. But I just sat there and I waited, and I had my stop limit order at um, not my stop limit, but my limit order at 1857. I'm like, man, I'm just gonna. I don't want to take the loss, so I'm just gonna cover at my entry. And then I'm like, and I had to reevaluate myself. I'm like, covering at my entry is not a real, um, what is it? Not a real. Uh, it's an arbitrary risk point because it's just my risk. Looking here, the real risk is either higher day or this consolidation area that it's consolidating at. It's going sideways just for a little bit here. And I'm like thinking of what Michael Huddy said, and it's like that's arbitrary. That's just random to just exit out my entry. But 70 was one as well, but not really because I just went off of the closest pop up right here. Well, not right here. 65 was what it was. I went off the not 70, but 65. See, I went off of this one right here because this was the um, pop up that attempt to like rebound or whatever. And I just went off of that, and I'm like, okay, if it starts consolidating under that and then pushes up, then that's a bullish move. So that's why I had that as my risk. I would have had it at this one because this is the next attempt to rebound um, at the highest point. So exiting out of my entry was arbitrary. So I had to decide whether it was between my entry or my risk. And at the time, I don't think I even made that decision. Um, I just was ready to like exit. I don't know where I'm going with this video, but I'm just trying to do a review. So it started fading, fading, fading. And honestly, at this point, I had no, as it's fading, I had no idea of where I wanted to exit. I was playing a chart, but I was also playing, I was battling between playing the chart and let the chart tell me when to exit and playing the what's the word? Playing the risk to reward. And my target goal is $1.50 to $1.50 or more. Risk to reward is what about 13 cents. So I need to aim for double to triple that, 20 26 to or more, 26 cents or more. Or I can just play the pattern, the chart, which would have been a better idea. But who can who can sit through all this roller coaster? Um, so then I started playing the dollar amount, which is bad too, which is bad. And it started pulling back. At some point right here, I was up $1,000 or $1,200, and I was like, "That's good enough for me. I'm out." Which is the wrong mindset because you shouldn't play the money. You should play the strategy or your risk to reward. Um, and I don't even like playing to my target unless my target's small. But Sykes, he plays to a target. He has a target goal, but he also uses risk to reward. But when I saw that I was up $1, I was like, "That's good enough, Sonny. You're up $1 per share. Compared to your risk to reward, you're up almost 3 times, almost 10 times your money that you were risking." And then I tried to exit. Uh, I entered my order at 17.55. Oh no, I didn't try to exit here. Where the fuck did I exit at? I'm sorry, I have this right here. I'm tripping. So where is this? After the consolidation, yes, okay, so I see it. So that's where I exited at 17.55. So after the consolidation, it pulled back. Consolidation here, pulled back. Um, it kept going lower. It broke this level or close to this level. Yeah, it broke this level. Um, because this was a quick pullback and then rebound. Like a dip and rip. You can call it. There's so many different names for it, but basically it's a pullback and then squeeze. So that becomes support. This becomes support levels. They're not key support levels, but they're just support levels. And I went to 1744. I was up like $1,200. Then it started pulling up, and honestly, I got real emotional. I'm like telling myself I want to make at least $1,000 in this trade, which is the wrong mindset. Um, but um, I did, and I'm like, I know this is a choppy stock. It's gonna hit at one number, pull up or pull down, and come back to that number. So I entered my order at 1755, which I really didn't want. I wanted to get out in the 40s, 1740s, but I entered it at 55 just to get out, and that was a little bit over 2 cents over $1 per share, and it hit my order, and I got out for a thousand $1,089 profit, which is like right here. So ended up fading more, as you can see. Um, and when I saw this stock, I honestly did not look at the SEC filings. I did not look at the past history, which this is my first time seeing the past history. um, which is clear resistance here. But I did not look at the past history. I did not look at the SEC filings. It wasn't until after I traded it. Maybe I went and looked at the SEC filings. What's the name of the stock? ALT. Yeah, it wasn't until after. And wow, I was like after this video, I was just evaluating shit, talking to myself. Told myself I was very proud because my performance has been way better since from the beginning of this year. And as you can see here, you got the news for today, which I have no idea what the news is. What is it? Today they released the press news. So they released some news about some positive shit, something positive with the company. Don't really care. Didn't even look at the float or the outstanding. I don't care right now because I'm done with the trade. But I just saw, and they got an offering. Um, you know, directors' decisions. So I didn't even look at none of that. I just saw the chart, and I know what this is. I wasn't 100%. Oh my gosh. I didn't even look at the 5 day chart. I wasn't 100% sure that it was just gonna do another fade and spike, fade and spike. But when I saw it, I was like, it's middle of the day. The volume is gonna kick down, as you can see. All the volume right here. It's the highest point, so the volume should be kicking down soon. Because it's the middle of the day, people are going to lunch. People are done with this trade. People don't want nothing to do with it. So I'm like, looking at the probabilities, there's a high chance this is gonna fade. And I was right. I was on the right side of probability. Um, but I was late to the game, and it's okay. And the only reason why I saw this stock because I just took a, for some reason I just took a look at my scanner, and I was like, what else is up for the day? Did anything go up in the middle of the day? And I saw ALT, and I was like, oh, okay, let me take a look at it. It had a, it had enough on the float. I mean, enough on the shares. So I like stocks that have a lot of shares available to short. I don't like hard to borrow stocks. Um, when they're hard to borrow, that means nobody can really get in. It's most likely gonna go one direction. Um, I don't know. I don't know what I'm talking about right now. But I like stocks that have a lot of a lot of shares available to short. So let me show you an example. Right here, this is a million shares available to short. I like when it's at a high percentage. This is not as high as I want, but it's at a high percent. It's a high percentage for that company, 20% for the day, and that's great for them. And then I like when the dollar price is higher. I don't like shorting stocks that are at low prices, like $5. I'll do a $10 stock, but $5 stocks, five and under, I don't like um, because I feel like they're too close to one, and they're they're easier to get manipulated because they have to stay above the dollar mark, the dollar range, because if they don't, they'll get delisted. And these higher price stocks give so much more advantage of gains. Um, if I had a big account and I was trying to get in this stock, It'll be easier for me to get in because it requires a lot more money. It's more liquid. Um, Compared to a lower price stock, it's going to be more liquid. But if you put a lot of money into it, it's going to move. Um, it's going to move fast. So I like a heavy float, a heavy outstanding, and a lot of shares available to short stocks. That's just what I am. That's just what I like. Um, and you can consider this not to be penny stock trading. This is still penny stock trading, but just with higher prices. But yeah, it faded way more than what I expected. Down to the high 15s. Um, so I'll be watching this tomorrow to see if it's gonna give me a first red day, but I think it will. Looking at the past history, excuse me, I think it will. So that'll be the number one stock to watch. ALVXL will be another one, and this one is too low now. I'm not even gonna watch it. I'm just gonna watch it for tomorrow, but I'm not gonna trade it. But that's it for today. Thank you. Oh, by the way, I'm up 23K, 23,300 since I began um, paper trading. Um, so what that means is that I've been performing a whole lot better, and I'm really proud of myself. I really am. The only problem is that a lot of these trades have been me being down a lot, and then because I'm failing to exit the trade, and then I'm holding on, and I'm I'm waiting for like high day to just get out of high day instead of getting out um, when I was supposed to, and it ends up coming back down and giving me back some gains. AMA, AMC, which I made like 10 grand on, that wasn't one of them, but um, like majority of these were first red days that I got in too early. It spiked the first 30 minutes and then came crashing down. I'm not just holding and hoping. I know I know it's gonna come down. I know the statistics to it. I just failed to exit my trade, and that's why I hold on to it because I'm like, okay, yes, I missed the chance to get out, but I know the opportunity of where it's gonna come down is coming. So I'm not just holding and hoping throughout all these trades and getting lucky. At least I don't think so. I'm actually performing well, especially with ALT. I was able to recognize that it was going to fall, and I had my risk ready to exit. But that's it. Thank you.